Ahoy there, traders. How are we all doing? Hello, hello, hello. It's Friday again. Can you believe? Specifically, Friday the 13th. Something, I used to work with some pit traders. I wasn't fortunate enough. I did try, but in the late 90s, pit trading in the UK was kind of disappearing. Well, specifically in 1998, 800 pit traders from Barclays were suddenly unemployed. Anyway, so that career choice was shut as soon as I thought about opening it. But I did work briefly for a prop shop, and I used to work with some ex-pit traders, and they used to tell me all about the superstitions that they would have as pit traders. If they were having a good day, they would basically try and recreate the day. And it's all because they're superstitious little money junkies. If you're having a good day, then you want to recreate it, you want to replicate it. And I suppose this is where the nucleus of production line trading starts. As I'm kind of exploring this and regaling you with a story why everyone's logging on. But some of the stories that you tell, like there was one guy, and bear in mind, this is in the days where pits, there was hundreds of people shoulder to shoulder, literally, dripping with sweat with each other. And if one pit trader had got in a fight that day, and fights used to happen very regularly, teeth were flying, broken noses galore. The amount of stories that you'll hear if you ever manage to speak to a pit trader, just to ask them to tell you about their worst day trading. And it's probably got nothing to do with the trading results. It's like they got in a fight, fisticuffs fight with someone. But if that was the case, and then they went on to have great trading results that day or that week, well, guess what they're doing tomorrow? They're going to go and pick a fight with the same guy that they just had a fight with the previous day to try and recreate the madness and it's crazy. And you think I'm joking, but you can go and do Google search. There's books written on what it was really like in the pits. And the stories that they used to come out with, there was one time the guy that was working with used to trade short sterling. And he was in the pit there, and he'd have like a good day, so he'd recreate it. And what had happened with this one guy who had his best trading day ever, he went on a bender the night before, didn't come home, came in still stinking rotten drunk. He had missed the bus, the train. He was late. He went through the turnstile the wrong way. He was wearing yesterday's clothes. He lost a shoe somewhere. So he recreated that experience to see if he could get the same trading results. Because so he went on a bender, missed the first bus, threw his other shoe away. So he's in the pits, literally looking like a beggar, and trying to trade and trying to recreate the success. And it's kind of amusing, the stupid things that we do, the superstitions that we have. And I just thought it was appropriate to just regale you with a whimsical story as it's Friday the 13th. Trading superstitions, though, we've all got them. I think we've all got them. There's certain ways, the habits that I like to do things that do influence my own trading. But at least I try and justify a reason for it, because I am a big fan of being able to replicate what we do. And that's why I call what I do production line trading, because I'm trying to recreate the experience, if you like. If you can have a great day, but if you can't replicate it tomorrow, it kind of becomes useless. But I don't quite believe in not washing or wearing the same clothes or picking a fight or all the other crazy things that they would do just to try and get a winning day. Nonetheless, it looks like we're all here. Welcome one, welcome all. Adrian, Al, Bal, hello, Emily, Enoch, Ian. I'm just skipping down. Perry, Peter. Oh, we've got a full house today. Rodrigo, Steve. Hello, Steve. Hello, Zach. If I've missed your name, it's nothing personal, unless it is, in which case you'll never know. Right. Just getting everything ready. I've got my little drawing stick. I've got my widgets and whiz bangs ready. Cool, cool, cool. Right, let's get into it. We're going to take a little look at the markets. If you're brand new to these sessions, the way that we normally, the way that we roll around here, Trying to be down with all the younger people in the room. I'm at that point now where I'm not quite old to be old, but neither am I young enough to be considered young. I'm just at that middle ground where the feathers are going a little bit spoiled and ruined and maybe a little bit tattered around the edges. But nonetheless, the way that these sessions normally roll, I don't know. I've had a crazy pill today. You'll have to bear with me. If you are new, bear with me. We get there in the end. We're going to look at the markets. The session normally lasts at least 20 to 30 minutes, usually an hour. We're going to look at the markets, going to find some stocks to trade. We're going to get right into it when I've finished rambling. And we'll take a look at what the markets are potentially offering us. So if you are new, my name's Phil Newton. I'm a trader first and a mentor second. I'm just a regular guy. I'm not a Wall Street guru. As I just said, I missed that ship sailed before I could get there. So I'm not a Wall Street guru. I missed out on it. I've worked in a few prop shops. I've done a few things over the year. I've been around the block, started hand-drawn charts in the 90s, managed private client accounts, all the usual paraphernalia that you would expect from someone who's done this once or twice and made a success. I've been on some of those fancy publications that you can see on the bottom there. The thing that's probably most important is I have coached thousands of people. I am the type of personality that enjoys coaching and mentoring people. I run a hard tight ship. If you do the work, I will help you. But I've personally mentored, almost 1,000 traders now. I need to update that number, from retail through to hedge funds, banks, owners, institutions, and obviously great people like you, just regular people who want to make trading work. I found my own success and I get to do whatever I want to do with my spare time. The way I like to approach trading is, as I mentioned, as a production line. And part of that for me is I want time freedom as a part of the process, because I don't believe that you should be sitting at the charts for hour after hour after hour, flicking through the charts like a zombie. That is a waste of your time. It's a waste of my time. And it's time that I can be doing something else. I like going on long rambles, long walks, reads in the park. I like reading books. I like coffee. I'm pretty dull and boring. I like to have fun and enjoy myself ultimately. But whatever you want to do, that's what you put in the other time. That's what you do and you put in your other time. But that's what I like to do. So I'm going to be your personal swing trading mentor. Every week I get to do these sessions. I try and cut through the bullshit, the nonsense, the hype, the hyperbole, just so that you can zero in on how to profit from swing trading stocks and create wealth and generally live your best life. Because as we mentioned, we've cracked the code. It was a long, hard journey to get here, but nonetheless, we're here. I want to be as efficient with my time as well as my profitability. And if we can strike the balance of both, then we should be able to do this in an hour a day. And to be fair, if you want to do it in an hour a week, like this week, I've been doing other things. The reality is I've just kept an eye on my portfolio this week. I've not really done much. And I'm going to do all of my work today. So I'm maybe spending 1 or 2 hours today doing it because I'm at the desk doing these sessions. So I've got several trades that I want to place. We're going to look at some of them later. And you can do all of that instead of an hour a day. You can do it in probably 2 hours, 2 or 3 hours in, once, twice a week. You can split it up any way you want is all I'm trying to get to. So with that said, let's go. The important part, Phil, show me the charts. Show me the charts. Here we go. Let's take a look at it. So I like to have a streamlined approach. Let me just go back to the slides one more time, baby. One more time. I like to approach, where is my widget? I've got a little, here's one I prepared earlier. It's a million miles away. There we go. I like to approach trading like it's a production line. And it's by intention, because I want it for me first. I'm a selfish bugger and I want it for me first. It turns out that it's a really good process. And when you get used to it, it can be time efficient. So a couple of things that we go through every week is we normally start with a mechanical scan or assessment. Again, the process that I usually refer to is production line. So inside the first step, we've got multiple checklists for how do we find something to trade. And this is the time-saving element. This is the bit that means that I don't have to flip through chart after chart after chart like a mindless zombie trying to find everything. When we find something, it's only then that we'll go to the visual confirmation. And all I'm looking for, is it doing one of 6 things that I like to trade? 6 money-making blueprints. We all know one of them at the very least. It's buy the dip. So what I'm going to do is I'm going to quantify and qualify, and we're going to look at that in a moment, what buy the dip actually means. Not just conceptually, of course, when the markets are selling off, that's a dip. Well, we need to know what the trend is first that will allow us to buy the dip. So that's what I'm looking for. That's what I'm going to quantify. And that's what we're going to go through later. And that's going to help us find, well, that's what we do on the mechanical scan. But then we want to visually confirm, is it doing what I'm expecting it to do? And if it's not, well, guess what? I'm not going to go to the next step. If it is, I am going to go to the next step. I'm then going to look for my entries, my exits, my stops, my targets, what I refer to as TTE, time out, target out, exit out. There's a couple of things that we can do, but essentially it's the management part, the entries, the exits, the stops, the targets. What are we going to do when we're in the trade, essentially? So that's what we look for. That's the overarching process that we do every day. And it's what I teach all of my insiders in our over-the-shoulder sessions. So I do these sessions 2 other times during the week, so that we can look at the specifics of the trade. And obviously you can appreciate I'm giving you in this open house a more surface level viewpoint, just because we don't have time to get into the details essentially. But nonetheless, we'll go as far as we can, as quick as we can. So that's the process that we're using. That's the framework or the structure. So back to the charts. Now, X, where are you? X, Y, Z. So I'm turning the chart off. So intentionally, the chart is blank, and I've done that deliberately. So the first step number 1, is a mechanical scan. So that means that over here on the left, I'm going to do all of my heavy lifting before I look at a chart. So what I'm doing is I'm trying to find a trending opportunity that gives me an opportunity to buy the dip. So I'm looking for a trending opportunity that allows me to buy the dip. So what, of course, I need to do is to define not only what the dip is, because it's not just a downward movement in the markets, I also need to know what the trend is before to be able to buy the dip, what the trend is before to enable me to buy the dip. And it seems really obvious that that should be done. But look at social media, look at the news, look at the way that the financial markets are reported. Any down day on any instruments, everyone thinks there's a dip. And it's, insert your own expletive, it's not the case. So we want to define what a trend is. So that's what I'm doing over here on the left. And you'll see that we have some red and blue boxes. So from left to right, we've got the 20-period moving average, or reference to the 20-period moving average, a reference to the 50, and a reference to the 200. I've also got a number, and then I've got another box. So that's what we see here. So we've got 1, 2, 3, a number, and the box. Let me just try and highlight it. So that's what I'm looking at there. Can everyone see that? Put a little yes in the comment box to let me know if we're on the same page. You can see the blue, 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 a number, and blue. And if you're on, you're watching this on Zoom, so you should be able to pinch and zoom in if you need to do that. So if you're on a mobile, you can just pinch and zoom in, and you'll be able to do that quite nicely. Awesome, Emily, Glenn, Al, Enoch, thank you for your interactions. So what this does, it allows me to evaluate the trend. Now, there's another number here, and that is what is in the last 60 days, what's going on. That's my thing. So in the last 60 days, what is the percentage of movement? So that's what that box is there. And then just to the left, I can also look for what is in the last 10 days. What is price doing in the last 10 days? So they're the kind of the markers that I'm looking for. So the process that I use is the average prices need to be crossed. That means that the 50 period needs to be above the 200 period. And if that's true, then this box on the right here is going to be blue. The number to the left. So I'm just looking, I'm doing this here. So I'm just blowing it up there. But then the number is going to tell me that it's how long that has been in a state for, how long we've been trending. So as long as it's over 40, meaning that for at least 40 days, then the average prices were crossed up. And the reason why I'm doing that is I'm trying to potentially avoid false starts, false movements, those times where we get basically well, false starts. You can't say it any other way, Phil. It's a false start. False start is a false start. So that's what I'm looking for. So the first thing is the average price crossed up? Yes. How long has it been in that? It's been at least 40 days. So if it's over 40, that's fine. That's all I'm checking. Then the next one is price above the 200 period moving average? Yes, it is. Cool. Is price above or below the 50 period moving average? Yes, it is. And in this case, is price above or below the 20 period moving average? Yes, it is. So if it was above, they're all going to be blue. Now, that's basically what it's telling me. Are we trending? Yes. And where is price relative to the 200, the 50, and the 20 period moving average? Great. Now I've got this information. What do I do with it? Well, looking back down here on the left, I need to see my average price, the 50 period over the 200. That's great. If that is true, then I've got the possibility of a trend. If it's been in that trend for at least 40 days, that's great. Then the other thing that we need to do is check that number over the last 60 days. So I can look at that number, and that's just there. So in Apple's case, it's up 19% in the last 60 days. So let's just draw my little widget, 19% in the last 60 days. So that's telling me that the stock is not only are the average prices crossed up, but it's telling me that, actually, price is actually moving up in the last 60 days. Awesome. That's exactly what we want. So I'm expecting to see a trending chart. So if we went and looked at it now, we're not going to just yet, but if we went and looked at that chart, it's probably trending. Let me pause there. Does that make sense to everyone? Does that make sense? So what I'm trying to do is I'm trying to look at the blueprints of what I'm expecting to see, and then go and find those 3, 4, 5 stocks. Thank you for your comments, everyone. Try and find those 3, 4, 5 stocks that make sense, and only look at those 3, 4, or 5 stocks. And that means that I can look at, if I wanted to, look at hundreds of stocks or scan hundreds of stocks very visually, very quickly to say, okay, here's 3 of them today that make the most sense. So I only need to look at 3 charts. And it's one of those things that takes longer to explain than to actually do. Okay, great. So we've got 3 criteria for our trend. Average price crossed up, number 1. In trend for 40 days at least, and is moving up in the last 60 days. Great. It's probably, can't say for certain until we check, probably trending. Great. That's what we're going to define as a trend. That means that the 4th criteria, this column over here, I've drawn too many squiggles for us to see what the number actually is. I want to try and find the chart when it's at that point, when it's retracing. So I can have 2 criteria for number 4. It's either going to be down 10% in the last 10 days, or, so that's number 1, or A, number 4, B, or it's going to be below the 20 period and or below the 50 period. So if that was true, then going back to our little scan, that box below the 20 would be red, and or below the 50, that could be red as well. So it's either down 10% in 10 days or below the 20 and below the 50. It's probably going to be that one. Most of the time you'll get both. We don't need them, but just in case the average prices are very far apart from each other, that's why we've got the 10% in 10 days. And again, most of the time we'll see price below the average prices. So I'm looking for this red, red, blue, blue situation, and the number to be over 40. Again, if that's true, then most of the time we're going to be looking at a trending price. So I think that's pretty interesting. So let's clear things up. So that's what I'm looking for. And very quickly, I'm just going to highlight the line below. Very quickly, I can zoom in to Starbucks. That is doing it right there. And we can see Logitech, that is doing it. So we got 1, 2, and I don't see, well, we've got the 20 period, Hershey's. So just one red, red, blue, blue this time. But this time, the number, are we up percentage in 60 days? It's only 2%. It's not a bad thing. It just means in the last 3 months, it's probably a consolidation. That's all that's telling me. Because we've got this big number. It's been trending, or the average prices were crossed for over a year. But in the last 60 days, it's not really been moving. So it's probably a consolidation. Still not checked the chart yet, but we found 3. Is everyone happy that we've got at least 3 things for us to look at? Actually, we've got another one there, Domino's Pizza, DPZ. That's up 19% in the last 60 days, so probably trending. Let me pause there. Does that make sense? Does everyone kind of get what we're doing here? I'm trying to find a trending stock. Awesome. Thank you, everyone. Thank you for getting involved in this. It really does help me. So I'm looking for those times where price is trending, and it's at that part of the chart. It's retracing in the context of an uptrend. So if it's retracing in the context of an uptrend, that could give me, at this stage, it's not confirmed, that could give me a buying opportunity, maybe today, maybe in the next few days. SWIR. Yeah, absolutely. Yeah, SWIR. Yeah, missed one there. I'm already in that one. We've already got a trade on that, if you might recall. But yeah, that's certainly true as well. I think we looked at that last week as well. Anyway, it's potentially offering me a buying opportunity. That's the point I'm getting to. So that means that I can ignore all the other stocks that don't meet that requirement and just zero in on what could be the better candidates. And this is what my interpretation of the classic trend. Now, before we look at one of the charts, let's go and look at, let's go and look at an after picture. There we go, TWTR. Go look at an after picture. So this is what we're looking for. This is our model kind of look. We've got average prices. It's going up. It's in a trend for 40 days. And we're trying to find a part or a chart that's currently in one of the yellow boxes. That's what we're trying to find. Now, right now, Twitter's doing that. We've got this. That was the last time that we had a trade on. We've been following this in real time for the best part of a year. And now price is back below the 50-period moving average. So if it goes, again, just a line in the sand, if it goes above about $65, $66, that's going to present a fresh buying opportunity. A fresh buying opportunity. That's what it looks like. Can everyone see that? We've got just by hapstance, we've got one on Twitter. So that's exactly what I'm expecting to see, or something similar on one of the other stocks. So this is the mechanical scan, the mechanical step. And again, I can look at any number of stocks. I can rank and sort. So let me just show you how quick it could be done. I can sort the trend by the stocks. So we've got multiple stocks that are trending. So if I've got a big list of stocks, this is how I'll do it. If I've only got a small list or small segments, I'll just visually look down as we just did. But if I've got a big list of stocks, like this next segment, there's about 100 stocks in it. But I can do that. I can sort by days in trend. So I can put the low number at the bottom. And there's only one that's 12 days, so I'll just being lazy and not do anything with it. I can then say, okay, where is price in relation to the moving average? Is it above the 200? Yes, great. So there we've got all the red ones there. So we've got average price going up, but price is below the 200. So I'm just going to get rid of those for the moment. Then I can sort by where's price in relation to the 50-period moving average? Well, it's below the 50. Great. That's what we're looking for. And then is it above or below the 20-period moving average? Great. So these are all these are all the stocks that are meeting our requirements. So the reality is you saw how quick it was to do. When we know what we're looking for, we've got this red, red, blue, and then I can just look down this column here. Are we up? Well, it doesn't look like we're up in the last 60 days on these stocks. I probably don't need to look. We're actually down on most of them. So I probably don't need to look at any of them right now. Looking at the 10% down in 10 days column, we're not really down 10% in 10 days. So while the average prices are crossed up, I'm not really seeing anything to get excited about. I don't know about you, but maybe there's one here, VTR. It's up about 4% in the last 60 days. So it's probably consolidating. Now let's just go and look at it just so you can see what I mean by that. I'm not really excited by it. I mean, yeah, it's going up. It's below the 50-period moving average. It's certainly down over the last down 5% over the last 10 days, but it's not really trending in the last 60 days. And 60 days is just the last 2 months, 2 or 3 months there. It's not really going very far, very fast. So it might be a candidate, but it's just not exciting me. I don't really need to worry about it right now. Now, what is interesting is prices started to go above the 20 period here. So this tells me that if prices below the 50, which is what these red boxes are here, it's below the 50-period moving average, but it's above the 20. That tells me that the average price, the 20, must be below the 50 for that to happen. So maybe we've got a slightly deeper retracement that's been developing, and it's started to turn around. So these stocks weren't that interesting. I can certainly do the same thing. Let's look at the last 60 days. There's 2 of them that are up in the last 60 days. So let's go and look at that. So what I'm expecting to see here on this one, MAC, if you want to get a head start, average price has crossed up. We've got up in the last 60 days. We're above the 200, below the 50, but we are above the 20. So it's possibly that it's started to turn and resume its upward trend. Let's go and take a look. Let's zoom into the chart. So I've already got a few trades on this, but we can start to see that we've got this rally, this very long, lazy retracement here. So that's probably explaining why we've not got this long-term trend. But we're starting to move back above the 50-period move. So there's the 20 below the 50, but we're starting to go, oh, maybe today we go above the 50. So line in the sand, if we go above $17, that's going to provide a fresh buying opportunity for me. And you can see how quick, when you understand what we're looking for and how we're scanning for it, it means that, we can quite possibly find a couple of stocks which look really interesting. Let's take a look at 10. Again, we're also up 24% in the last 60 days. Average price crossed over. It's more than 40 days in trend. We're above the 200. Great. We're below the 50, but we are above the 20. So I'm expecting to see something similar to this. Let's go and take a look at 10, TEN. There we go. Fabulous. I've had some great trades on this. We followed this from the beginning of the year. We've had a wonderful trade on it. So we've got this big rally. We've got this deep retracements, and it's going back above the 20, but the 50 periods there. So, it's possible that I could take some sort of price action entry. We've got this reversal pattern. I call it reversal pullback, or a 1, 2, 3 reversal, 1, 2, 3. I could certainly use a price action entry at about $18, or just wait for it to go above the 50-period moving average. And I've got something that looks really interesting to trade. Where would I expect it to go? Look, up and left. First target would be a retest of the recent high. It's my usual default. So from $17.50 to $22. Do you want a piece of that? Does that make sense? This is what buy the dip looks like. You need a trending opportunity that is retracing, that gives me an opportunity. And I don't need to see this stock make new highs to profits. I mean, you've got a, what have we got there? $4 move potential on a sub $20 stock. That's really exciting. I don't know about it. It's not sexy. It's not headliner. It's not Tesla where it's moving $100. But you know what? $4 on a $20 stock. That's looking good. And it's proven that it can do it recently. And even if it gets halfway there, let's just factor in the bullshits. If it gets halfway there, $17.50, and it goes to $20, it goes halfway to target, that's still pretty impressive. Enoch, this is TEN. If as you're on Zoom, you can pinch the screen if you're on a mobile or on an iPad or a tablet. You can also deselect or you can change the zoom. If you're on a desktop computer, you can zoom in and do the same thing. You just have to use the mouse to select the zooming function. So if you need to zoom in and out and look at the ticker symbols or some of the detail, you should be able to do that. Does everyone see how relatively fast, perfect, that's correct, TEN, Tango Echo November. And does everyone see how relatively straightforward it can be to find something to trade? Relatively easy. And it's only easy because we know what we're looking for. Like, I'm not interested in stocks that it just doesn't make sense to look at the stocks. And even if you've got a large list of stocks, we want to do the heavy lifting. I only want to focus on the stocks that make the most sense. Like the ones that are moving, the ones that are trending make the most sense. Great, let's just look at those. And it becomes relatively easy to go, you know what, that's all I need to do today. And to be fair, if I was not doing this session and I was just putting my own trades on, I've got one or two stocks that make sense with this particular scan. I've got several other scans that I use. You can see that there's a few other tools and indicators here, but this is just one of the scans that I use. It's the most common one I use, in fairness. It's why I always talk about it, because most of the time I'll find the trades that I want with it. But if you want to look at a big list of stocks, we can find relatively easy way to find trading opportunities most of the time on most days. So it's not a case of like, what do I trade anymore? If you want to trade the trend, like define the trend. Like, what are you looking for? And there's an infinite number of ways of doing it, which makes it frustrating because, like, which one do you use? Because I'm not naive enough to think that my way is the only way of doing it. But which one is right for you? Well, start with something simple. I mean, after nearly 30 years now, this is as complex as I'm making it. Find a trading opportunity that's what we think is trending, and then go and look at it. So that's what we've done. So let's go back to our kind of the stocks that we're looking at. So we found 3 stocks. So what are we looking for? We're looking for, there we go, Domino's Pizza, number 101. It's got red, blue, blue, in trend, bullish, and we're up 19%. Great. This is just starting to retrace in the context of an uptrend. Why do I know it's just starting? Because it's only below the 20-period moving average, and it's only down 2% in the last 10 days. So I'm expecting to see it just starting to correct. So this might not be what I refer to as a today trade, but it's certainly a, this looks interesting trade. Click, zoom, when you know what you're looking for. So I think if I was to pop off this mortal coil today, and you were to never hear from me again, I think it'd be fair to say that everyone could replicate this tomorrow. Everyone could replicate this tomorrow. The advice that I would love to leave you with, whether you decide to classically trade the trend or not, is just know what you're looking for first, and then look for those. And we've spoken about this many times, but look for the characteristics of what you're looking for, and then just go and look for them. Classic trend. We just went click and pick. Domino, why this one? Domino's Pizza, red, blue, blue, over 40, average price up in the last 60 days. Great, click. Now I'm on to the visual inspection. Thanks, Glenn. Oh, I love the whimsical comments, love it. So we've done the mechanical scan. The second part of our scan or our production line is visual inspection. So now, again, we know what we're looking for. We're looking for that trend, the classic trend. So that's what I'm looking for. Does this look like the classic trend? This is only one of 6 patterns that I'm looking for, but does it look like the classic trend? Yes. Now I'm looking at this chart. It clearly is going up, trending. It's got a slope to it. Don't worry about it. It's actually quite clean. You could almost put a straight line ruler underneath all the lows, but that's a different story. But is it trending? Yes. Great. Now I can start thinking about, well, is it doing everything that I'm expecting it to do? Yeah, it's visually confirmed. We've got a nice rally. We've got a retracement. It's below the 20. So I can say, well, if it goes back above the 20-period moving average, if it goes, again, just running an approximation, a line in the sand, if it goes above $520, I'm going to be a buyer. Now, I'm not automatically buying. You'll notice that just because it's $512 now, it doesn't mean I'm getting a better price. Don't mistake like it being lower than where I want to enter as being good value. It could be at $500, $20 lower. I'm still going to be a buyer at $520. That makes that. Let me pause there. I think this is important to understand. Just because price is below the 20-period moving average, and maybe it gets down to $500, $20 lower, I'm still not going to buy it. I'm going to wait for it to go above the line in the sand. I want it to prove that it's turning around and resuming the uptrend like it did right there. Let me tidy the chart up. Like it did right here. I want to wait for that like it did right there. So price retrace below the 20, and I want to wait for it to go back above. That's where I'm going to get in there, not just because it's below the 20-period moving average. It's below the 20-period moving average is not mechanical. It's not descriptive. So I'm waiting for price to prove that it's above the 20 and to get long. Great. So you can capture that part of the move. Now, in fairness, you may or may not have taken this trade, and you would have got in at some portion of highlighting about there. Personally, I didn't. One or two of my students did. Personally, I didn't. I wasn't looking at it on the day. There was an earnings announcement. I'm going to guess we're just coming out of earnings season. So I didn't trade it. Some did, some didn't. There's no right or wrong here. If I'm not looking at it, and I wasn't, not going to trade it. However, a little bit of patience, it's come back to, it's not a million miles away. It's not a million miles away where you could have got in. So with a little bit of patience, if there's going to be a genuine trend, if there's going to be a long-term, multi-month swing in the stock, there's going to be lots of opportunities. Let me go back to Twitter. We've been following this all year. TWTR, there we go. So we've been following this all year. When you've got a long-term trend, and this has been going on, so July, since September, October is when it became tradable last year, you're going to capture multiple opportunities, multiple trades when there's a long-term trend. So don't worry if you don't get the first entry. Let's go back to Domino's Pizza. Don't worry if you don't get an entry. You might not have got that one, but you know what? You could have got that one. That's okay. You're going to capture some part of it. Maybe you were still in on the earnings pop as well. No big deal. You know, don't worry about missing an entry. I wasn't looking at it. I didn't trade it. I'm not going to blow wind in your sails to say, oh, of course I did. So look how clever I am. That's not about how clever I am. I just want to be methodical with a systematic approach that I refer to as production line trading to find trading opportunities in the most efficient possible way so that I can bugger off and go and do something else. I've got, it's Friday. For anyone who knows me, I've got ice cream sundaes planned. I'm going out. I'm going to enjoy the rest of my day. I'm going to enjoy the rest of my day. I do not want to be sat here for hours and hours flicking through chart after chart like a mindless zombie doing the stock market's equivalent of where's fucking Wally. I just want to go, there's the trade. That's the pep, exactly, Ezekiel. And that's the pep talk. Yeah, so stop messing around looking for where's Wally, where's the trade. Now, here's what most people do. In fact, let me look at the other trade. So Starbucks, red, blue. I feel like I'm about to do a UB40 song, red wine. Average price going up in trend 40 days. Visually, it's got, as we're looking at the chart, visually it's going up. We don't need to check the percentages. It's clearly been trending. Great. Buy the dip. Now I got in a little bit early just because, hey, I got in a little bit early. That's my fault. I didn't draw my line in the sand. I just went in, and that's my fault. But now we're back to the 50-period moving average. It's, if it goes back above, then I could get in. I'm already in this. You can see where I'm in. I get, oops. You're not always going to get it right. And I think this is what, no, come on. What are you doing? There we go. I got in a little bit early, and that's okay. And I got in based off the fact that I should have been in over here because I wasn't looking at it then. So I got in there. With the benefit of hindsight, I should have practiced what I preached and just bloody waited. That, we're humans at the end of the day. We're not infallible. So it's fine. I'm okay with it, is all I'm trying to say. But if you're looking for an entry right now, well, you can enter at the 50-period moving average, or you can wait for it to go back above the 20-period moving average. So $120, or, if it goes above, say, 116, so about $116, that's great. If it carries on going lower down to the 200-period moving average, I'll evaluate it there. But until one of those two things happen, if I was looking for a brand new trade right now, I'd be waiting for it to push high, maybe above $120. If I wanted to be a little bit adventurous, a little bit aggressive, which is what I did on my previous entry, I could get in around $116. Just wait for it to start turning around first before jumping in. So Starbucks has done, what's the other one? Red, red, blue. Twitter, we've already looked at. I'm just quickly scanning out. I think we had one more. Hershey's was the other one. There we go. Hershey's 104. Blue, I've done it again. Red, blue, blue. So it's below the 20-period moving average. So now we're looking at this chart. Let's zoom out. Let's practice what we preach. Step number one, scan. We've done it. Step number two, visual inspection. Is it trending? Is it doing one of our 6 money-making blueprints? Yes. Great. Step number three, look for an entry. It's retracing below the, well, to be fair, it looks a little bit like it did here. So I'm going to do I see what I refer to as an O and. Now I'm looking at this chart, I see something else. Trend consolidate, Not quite as big a trend, but it is consolidating. So maybe instead of saying if it goes back above the 20-period moving average, because we're right there now, I'll just wait for it to go above, say, $180. Just because I kind of see this kind of stair-stepping, trend range. So it's still in the range, of the last 2-3 weeks. So maybe I'll just do a manual override, give it an extra dollar or two and say, if it goes above, let's call it $181, 181. If it goes above $181, maybe I'll just wait before I place a brand new entry, just because I see this O&. So think about a trade entry. Where's my entry, my exit, my stops, my targets? So entry is going to be above the recent high, just because it's not really doing it's not doing a depth of retracements. That's why I'm making this decision. So the average prices have just caught up just naturally. So I'll just wait for it to make a new high. A breakout is what we might call that. So entry 181. Where could it get to? I can just, where's my exits? I can look back and say, well, what did it do there? What did it do there? And what did it do there? So it went from 170 to 180, about $10. Went from 160 to 175 there, so about $15. And it went from 150 to 160, so somewhere between $10 and $15. Everyone get that? All it did was eyeball mark one. It looks like it moves in $10 to $15 moves. I'm not making this complicated. So my entry is going to be about 181. My target exit is going to be plus or minus $10 to $15, somewhere around there. Again, I'm just saying somewhere around there from my entry. So if we add that to 181, let's just call it $10. So it's going to be 191, 196, somewhere around there. And because of the way that I use stock options, my exit out, exits, if I'm wrong, my stop loss. I don't typically use a stop loss just because I use a stock option, so I use the full price of the premium. But if it goes below, say, 175, somewhere around there, then I will start thinking about corrective trade management. There we go. Randall, good question. How long do you think you need? Let's apply the same logic that we just did with the targets. Took about 2 months last time, didn't it? Took about 2 months that time. Took about 2 months there. So you're going to need at least 2 months. Keep it simple, folks. Keep it simple. Yeah. You're going to need at least, I would always have more than you actually need, Randall. Always have more than you actually need. I'm giving you really surface level stuff here. Giving you really surface level stuff. As you can appreciate, just because we're pressed for time. But we found something that looks interesting. And I'm already in this just because I got in on the exact same setup just a month ago. So I'm just waiting for it to pull its finger out and giddy up and get going. But we found a couple of things that look interesting. And it's relatively straightforward to say, oh, there's the trade. You know, I don't want to hunt and go skipping through chart after chart after chart, because what most people do is, as I started to say earlier before I derailed myself, is most people would do this. They'll go random stock. Where's the trade? And then spend an hour. I'm doing the bunny fingers behind the camera, analyzing the trade. And all you're doing is, well, let's put, I can see a trend line here and it's retracing. Oh, there's the dip. Oh, doesn't that look great? And we've got this descending channel, and this is a bull flag, and it looks amazing. And maybe you've got, maybe this is going to be Elliott wave. This is, one push up, you've got 2 pushes down, you've got 5 corrective waves there on the correct. Oh, this is looking amazing. And maybe there's some fractal pattern in there. Maybe you could throw in a Gartley pattern or a butterfly, or I'm just recognizing what I see. Maybe you've got some crab type pattern. I don't fucking know what's going on, but you're going to spend 2 hours doing this and you're none the wiser. Is there a trade right now? No. Go and look at something else. Go and look at something else, because that's what most people do. And then they're going to go to the next chart and go, oh, we've got the same one again. Look at this. It's amazing. Oh, it's doing this 1, 2, 3 reversal pattern. That's amazing. It's at the 200 period moving average. Oh, it's amazing. It's looking great. And you put a trade on, and then it carries on doing whatever it was doing previously. And you've just spent an hour trying to figure out, doing the bunny fingers, how to trade. How do I trade this chart? So this is the difference. Now I'm looking at this chart. How do I trade it? Now I'm looking at this chart. How do I trade it? Now I'm looking at this chart. How do I trade it? Now I'm looking at this chart. How do I trade it? That's the mistake that and I did it. Everyone makes it. But you now know that that's one of the cardinal mistakes in trading. We want to know, what am I looking for? I'm looking for a chart that looks exactly like Twitter. Or insert the name of your idealized chart or pattern. This is a perfect, I don't know why I'm waving my hands at my monitor. You can't see me. One of these days, I'll turn the microphone, the camera on. You can see me animatedly waving my arms around like a lunatic. But you can see this is my idea of a classic trend. Buy the dip. Great. Let's model it. Let's figure out what it's going on. I've just explained to you what that is. It's 4 simple steps. Is it going up? 1, 2, 3 steps for is it trending? And 1 step for is it retracing in the context of the trend? That's what buy the dip is to me. You can't just buy any down day. You need to look for the context of a trend first so that you can buy the dip, the bit that people forget, in an uptrend. And when you've got a clarity on what you're looking for, it makes it easy to go and look for other things that have similar footprints. And we can't say it will always be exactly the same, because it won't. And we need to let that go. So you need to look for the hallmarks of things that look similar and are familiar. And then when you have that visual inspection, is it trending? Yes. Great. Let's go for it. Let's go for that trend. So we've got 2 or 3 opportunities that look great. I've seen better, if I'm going to be honest. I've seen better. But they're the 3 opportunities that we found today with our basic surface level back of the envelope scan. And as I said earlier, if I pop this mortal coil, everyone should be able to replicate it. And that's really what my hope is with these types of sessions, to be able to replicate it. This is why I refer to it as a production line. It's a mechanical scan to evaluate what's going on, so that you can repeat it today, tomorrow, next week, next month, next year. And maybe in 27 years' time, we'll be having these conversations still. For me, another 27, and maybe your first 27 years. Right. I think I've said everything I want to say, folks. I think I've said everything I want to say. I do help traders like you become better traders. So if you've got everything that you need from this session and will want to leave now, that's great. If you want to stay around for the unabashed, unashamed presentation to invite you to work with me. If you want to stay around for that, take about 5 minutes just to walk through what I'm touting and offering for you guys and girls to become better traders. So I'll just give it a moment. If you want to step away and you don't want to hear it, that's cool. Just want to make sure that everyone that does hear this just wants to hear me say, what have we got on offer? Because I've recently started a group training or group mentorship program, and that's what I'd like to invite some of you to join. So if you don't want to hear that, that's cool. Have a great weekend. I'll see you next week. You get loads of value from these free open sessions, so don't say you don't. But if you want some more deeper personal support with your trading, then stick around for the next 5 minutes. Right, I can see 1 or 2 people stepping away. Thank you, thank you, thank you. Thank you for all your kind words. Ezekiel, great. I love the comments. Thank you very much. Right, everyone's staying around. So I'll spend just a few minutes. I'll get straight into it. I've been doing this, coaching people since 2001, just for reference. I enjoy doing it. I'm very good at what I do from a trading point of view. But a recent epiphany that I had as a mentor is I caught myself saying this, and I've been saying this in some form or another for about the last 15 years. But recently, I just had a depth of understanding to my own words. And this is just the evolution of man, I suppose. But there's no better way to learn how a portfolio is being managed than to see how a portfolio is being managed. Of course, that's true. Lead by example is phrases that I've always done. I like to practice what I preach. It allows me to get trading results, and not only for me to get trading results, because I'm using what essentially is an automated system. And if you just want to follow the algorithmic part with no visual inspection, as we mentioned, then you can use automation. I've coded this up. There are 2 strategies that I have inside the main program. That means that you can follow a systematic approach. And if you want to automate it, you can do that. So this is why, again, you don't have to hear from it, from my, or you can hear about it from my students. My favorite comments and testimonial at the moment is, I feel as a way of explaining things that make you realize it's not beyond you. It's a system with proven results. This is something that anyone can do. And hopefully, as you can hear by my tones, it's great fun. Famed author Anik Singhal really pitches or promotes anyone but wants to do so here. He very kindly interviewed me on his podcast. Very smart man. Obviously, for interviewing me, he's even smarter. But it's not just the famous people who get results. It's people who are in our community already. They get involved. They get huge value from the interaction, the community side of it. And what I'm trying to highlight here is, I keep saying it's a production line because you should be able to replicate something similar for yourself. And these are just some of the recent results that some of my insiders have got. And it's all because of this production line trading. And what I do promise everyone is that you will not be, I found my image. You will not be a trading zombie doing the stock market equivalent of Where's Wally? So my question to you right now is, are you experienced but not yet seeing results? Or maybe you're a knowledgeable novice and not seeing results. And I would imagine that if you're still here, that's probably where your situation is right now. So one of the things that I recently started to do was to do these group training programs, actual mentorship programs to guide people down the process. But if you're a knowledgeable novice and you're flicking through chart after chart, spending hours trying to figure out how to trade the chart and will it work this time, or maybe a zombie trading, as I said, mindlessly flicking through chart after chart, playing the stock market equivalent of Where's Wally, hoping that the next one is the one. Maybe you're fumbling your entries, your exits, your stops, your targets. You're taking another losing trade that should have been, that was profitable, but was just mismanaged because you're great at finding entries, but you're not so good at the targets, the prop take, and the management of the trade. I would always say, and this was my epiphany recently, like buying another course when you really need a mentor, it's probably that you've got the knowledge. You don't need more knowledge. You've got everything that you probably need right now. You just need to know how to organize it into a seamless production line trading approach. So because you're doing that, you're spending hours flick through chart after chart, your trading results are mediocre, and undoubtedly you're feeling frustrated that it's not working for you. So my invitation to you is to come along and join us and look over my shoulder as I'm trading, and I'll look over your shoulder and help you with your trading. So production line trading is, as you've seen, what I'm doing and how I approach things. We have live trading sessions on Monday and Wednesday mornings, so that you can see how I'm applying this in more detail than what we went through earlier. You've had a taster of what we're doing. It is very surface level just because of the time that we have. We have some training, because again, there is some training because you obviously, if there is a knowledge gap, maybe you don't know one or two things. Usually for most people, the options side is brand new. So there is training involved. If you need the training, you can go in as deep as you want. But the quick start training is just the essentials to make it work. You'll know what to do and why you're doing it, and you don't have to spend hours learning the why. That'll come later. That's experience. That'll come over time. We have a decision tree, handy printable desktop map, so that what I've tried to do here is try and download my my thought process, so that you can go, basically, what would Phil do? This situation happens, this situation is a fact. Great, that means that this is the step that I need to take next. That's what a decision tree should be. It should be systematic approach so that you know what to do next. I go through my trade management, the time out, the target out, the exit out management system, which is the real secret to any trading success. It's not what you do to get in a trade, it's how you manage it. And as we went through a few weeks ago, we can actually turn many of the trade choices that we have, SWIR, I just want to point that out. We called that out last week. We placed the trade last week. It's not going in the right direction. In fact, it's 10% down today. But guess what? Because of the corrective trade management that we applied yesterday in our community, we're actually making money on that being wrong. So when we think about the management, it's not just a case of closed trades that aren't working. Like, we can turn a trade around, and we can turn a monetary loss and turn it into a profitable trade, even when our original trade idea was wrong. Of course, you're going to get the community. You're going to get to see what I trade every day with entries, stakes, to stops, targets, so that you can kind of match up what you're doing and see if you can replicate it. Again, leading by example. And of course, we get the community. You get direct access support. If you need help, it should be there. If you press the wrong button on a live account, just know that someone's there to pick up the phone, either physically, literally, or metaphorically, insert your own thing. But if you press the wrong button, just know that there is support there to say, hey, Phil, I pressed the wrong button. What do I do here? Great. I can often hop, even though it's a group program. I'll always, like, if you cock something up, I'll always hop on a call and help anyone that needs it. Just like Hogwarts, help will always be provided to those who ask. So, as I said, you won't be zombie trading. You won't be stressing over what the markets do. You'll learn how to manage a portfolio in a long-only environment, so that if there is a corrective move, you'll profit from the downward movements as well. You won't be reading through boring company reports trying to divine any value whatsoever. And if you want to spend as little as an hour a week doing it, you can just do it in an hour a week. That's what I did this week. I've done very little on my portfolio other than the coaching and mentorship sessions. And I'll be doing most of that after this call today. So if you want some help, what are the next steps? I just want to be very clear. I only want to work with highly motivated individuals. If you've got the motivation to make it work, I will be in your corner, supporting you and pushing you along your journey so that you can learn in the fastest possible way. For anyone who's in my programs, they know that I'm with you, like at the drop of a hat, there with you. So if it is you and you want to participate, let me just get the link. What I will say actually is, if you want to have a conversation about it, shoot me a message. I'm just popping a link in the chat box. So if you do want to read a little bit more about it, there's a short video which just explains a few more things as well. When you get to that page or when you get to that link, but you'll see something that looks like this. There'll be a little bit of a summary about what's going on, but you've kind of had a taster of production line trading today already. We'll be going through that together so that you can learn that process and not just see me do it without any understanding. Again, the idea is to be able to help you become the best possible trader that you can be when it comes to production line trading. So if you do want to click that link, it will take you over to some extra information. And if you sign, and what I'm going to do, if you sign up in the next, I'm going to say hour, so 1 hour. So it's just turned the hour now. So it's, what is it? It's 10 a.m. Eastern now. At 11 a.m., anyone who's signed up before 11 a.m., I will personally hop on a call tomorrow, Saturday, and help you get set up. If there's one person, you'll get a private one-on-one. If there's 2 or 3 people, we'll do it as a group. But tomorrow morning, for anyone who signed up in the next hour, I will personally hop on a call and get you set up. If you've got TradeStation or not, I'll help you through that. We'll get you set up with exactly the same tools that I'm using. If you're not using it, I'll show you how to set everything up ready for Monday mornings, your official first session. So if you do want to join us and come along, again, my commitment to you is I'll help you get set up. I usually refer to this as a pre-session session. So just help you with the tech setup, answer any initial questions that you have. Maybe you need to look at the brokerage choices that you have or the charts and stuff like that. You can just help you with the kind of the stuff to make it work, the tech setup. So if you want to join us, that's great. If you sign up in the next hour and enroll with me, send me a message. I can probably have a chat with you later on today as well, but I will hop on with anyone who signs up in the next hour tomorrow morning. I'll confirm times by email, or if you do sign up, send me a message and we'll work that out. But it's probably going to be about this time tomorrow, so around about 10 o'clock in the morning. And I'll do that for everyone that joins or decides and takes the leap of faith and allows me to help you along your journey to become the best possible trader that you can be. I think I'm done, folks. There's several people have stayed around, so I guess there's a few people that are interested. And if you are, that's wonderful. I look forward to working with you later, or speaking to you later today, working with you tomorrow, and officially we'll be looking at trading opportunities from Monday. We've actually got several trades that we'll be placing today, and it won't be too late to take a look at them on Monday, because that's what we'll be doing. We'll be reviewing the trade entry choices on Monday. And if you want to have a little look, we've got, where are we? We've got several trades that look interesting right here. So we've got Boyd, CAT, EA, GT, IGT, LNG, MNST, MO, Match, STX, 10. We just looked at 10, TSEM, TTM, and USA. So all these trades here, we're going to be looking at those, or I'm going to be placing them today. We're going to be reviewing them on Monday. And if you want to join us for the entries, the exits, stops, and targets, and have a look at how a portfolio is managed, including the entries, the scanning, and some of the alternative scans, then we'll be doing that on Monday. But for now, tech setup, the pre-session session, everything that you need to get starting and hit the ground running for Monday's session, if you do sign up, we'll do that tomorrow. If there's any questions, comments, or observations, I will be around. I am at the desk. The best way to get in touch with me, if you do have any questions, is via Slack. If you go to my, most of you have got access via email. If you're all here in any of my emails, you'll see a link to Slack. And just click on my name and send me a direct message. And happy to answer any questions that you may have before you decide to take that last step. Thank you for your time, folks. Thank you for your attention. Hopefully, I will see you all tomorrow. If I don't, I'll see you next Friday at the same time at the same place.